Hello, everyone. I'm Xiaoping Zhang, Greater China Regional Director for USSEC. It's my great pleasure to share you with the soy market updates for the region in about 20 minutes. The region consists of China mainland, Hong Kong, Macau, and Taiwan, with a total population of about 1.5 billion, accounting for 1/5 of the world total. The urbanization rate in mainland China arrived at 60% in 2018, an increase of 10 percentage points from 2010, while it is 78% for Taiwan and 100% for Hong Kong and Macau. If you look at the per capita soybean consumption, you will find in Taiwan, it is over 115 kilograms, making it the leading soy consumer in the world. And in mainland China, it is 70.5 kilograms. So in terms of the per capita soy consumption, we regard Taiwan, Hong Kong, and Macau as the mature markets and the mainland as a growing market with a potential increase of 45 kilograms in the per capita soy consumption, making it close to that in Taiwan. The region has a long history of consuming soybeans, mainly in the form of many traditional tofu products. There's no doubt this is the biggest food bean market in the world, with a market size of around 14 million metric tons. However, the main use of soybeans started to change since 1995-96, when China became the net importer of soybeans and soy products. And soon after that, the Chinese soybean crushing industry started to expand in 1999 and the year 2000. In the last decade, around 85% of the soybeans consumed in the region were crushed into soybean meal and soybean oil to supply the increasing demand for soy products. The pie chart on this slide illustrates how important soybeans to the industry and consumers in the region. We have many choices for oil meals to be used in animal feeds as protein source. And like in many other countries in the world, soybean meal has been the #1 choice by animal farmers. It supplies 3/4 of the total meal in animal feeds. Look at the oil pie chart. We have even more choices for vegetable oils. But still, soybean oil is the #1 edible oil, taking 45% of the market share, followed by rapeseed oil, palm oil, and peanut oil. The region is also the 4th largest soybean producer in the world, but its production of around 15 to 18 million metric tons a year can only supply 10 to 15% of the market need. The red line in the chart is the total consumption. You can see for more than a decade, the region has been leading the world in consuming soybeans, and current market size is over 100 million metric tons. With a big gap between production and consumption, the demand should be supplied by imports, as the green bar shows, which demonstrates how dependent this region is on soybean supplies from other countries, namely Argentina, Brazil, Canada, and the United States. As we have seen in the last slide, that 85 to 90% of the soybean consumed in the largest market in the world are imported from other countries. It is not surprising at all that this region dominates the global soy trade with over 60% share. That's to say, 2 out of 3 ocean-going vessels loading soybeans at ports in America, such as New Orleans, Seattle, Panaragua, Santos will be ended up unloading the beans at ports in the region like Qingdao, Shanghai, Guangzhou, and Kaohsiung. For US soy industry, this region has been the #1 destination for many years, accounting for around 60% of its total soybean export. However, things suddenly changed when the trade war between China and the US was triggered in mid-2018. And the US share dropped significantly from 61% in 2016-17 to 28% in 2018-19, a loss of over 20 million metric tons of soybean sales for the US soy industry. And thanks to the Phase 1 agreement made in mid-January this year, China is now coming back to the US for soybeans with its tariff exclusion arrangement. And we are hopeful that the lost market share could be regained when China strives to fulfill its commitments to purchasing increasing amount of US agricultural products. However, if you look at the current weekly soybean export numbers to the region, I don't think those numbers are very promising. At the beginning of the current marketing year, we estimated the US could export 21.85 million metric tons soybeans to China, Mainland, and Taiwan combined, given the improved trade relation and increasing demand. And also, the latest USDA estimate for soybean export is still 45.59 million metric tons. However, as of May the 14th, the aggregated exports for China and Taiwan are 14.31 million metric tons, while total US soybean exports arrived at 35.11 million metric tons. That's to say, the US export industry should make additional sales and deliver those booked beans, like 10.48 million metric tons of soybeans in the remaining 15 weeks till the end of August 2020. That should include 7.54 million metric tons to China and Taiwan, accounting for 72% of the total. So I personally think it is unlikely to happen unless we're going to see some miracle purchases for old crop from China, or other suppliers couldn't make the deliveries due to the worsening situation with COVID-19 pandemics that will help redirect the supplies from other origins to the US. As I mentioned earlier, China, as a major soybean producer, used to be a key exporter of soybeans and soybean cake back in or before 1990. However, as the economy was further liberalized in 1992, China started a new round of fast economic development or economic growth since its reform and opening policy in 1978, which spurred the consumption from larger and wealthier population for better food, such as meat, poultry, eggs, milk, and vegetable oils. Let's look at the chart of soybean meal consumption in the region. It was exploded in China in early 90s with an annual growth of 15.3% from 91-92 to its peak in 2017-18. And the 5% reduction in 2018-19 was mainly caused by the African swine fever. And of course, the trade war had some demand rationing effects as well. Taiwan is a more stable soybean meal market with about 1.6 to 1.8 million metric tons a year in the past 3 decades. Basically, soybeans for food and for crush in Taiwan have been stabilized at 2.6 to 2.8 million metric tons. Very consistent all these years. So in my next few slides, I would focus on the market situation in mainland China. The main use of soybeans in China is for crush to produce soybean meal, to a lesser extent soybean oil, because on top of the imported oil seeds, China has also been importing all different oils, such as palm oil, soy oil, and canola oil to supply its need. Therefore, the demand for imported soybeans has been driven by meal demand from day one when China became the net importer of soy. Due to its unique nutritional value to animals, soybean meal has been widely used in swine, poultry, aqua, and ruminant feeds, with swine and poultry the biggest consumers as shown in the left chart. And China is now producing over 80 million metric tons of pork, beef, mutton, and poultry before the African swine fever outbreak. And 40 to 50 million metric tons of fish, shrimp in the past 10 years, as shown in the charts in the middle and on the right. And China is the #1 producer, actually, of animal feed, meat, and aquatic products in the world. In 2013, China revised its national food security policy to be more realistic after balancing between its agricultural production resources and the upgrading demand for food from the growing and urbanizing population. For major crops, the bottom line is a little different. That is absolute security for wheat and rice, self-sufficiency with moderate imports for corn, and open trade for soybeans. So for wheat and rice, the self-sufficiency rate should be maintained at above 95% to ensure the absolute security. And for corn, it is believed the rate should be maintained at 90% or above. And in the last decade, it is well over that level, providing opportunities for corn imports into the country in the future. But for soybeans, the self-sufficiency rate has been only 10 to 22%, and China needs soy imports at any rate. Since 2018, this market has been greatly impacted by 3 major unexpected events: a trade war with the US, the outbreak of African swine fever, and the COVID-19 pandemic. Trade war has significantly reduced China's purchase of soybeans from the United States and increased the cost as prices paid by the Chinese importers for soybeans from other origins were the highest in the world from June to December of 2018. And at the same time, US soy was on sale for the rest of the world. The Chinese industry had to either reduce the use of soybean meal in animal feed and turn to other protein meals or source soybeans from other suppliers, which could hardly be 100% secured in such a short time. And for the period of October 2018 to January 2019, we have seen the lowest levels of soybean imports into the country in the last several years. We know swine feed is the leading feed product, followed by broiler, layer, and aqua feeds in China, accounting for around 40% of the total feed production. However, this sector was severely hit by the African swine fever starting from early August 2018, and it was spread into all its 31 provinces, autonomous regions, and municipalities in 9 months. The number of reproductive sows had shrunk rapidly month by month, especially starting from January 2019 till we saw a slight recovery in October last year. And the recovery is still continuing since then. But still, the inventory number hasn't arrived at the pre-ASF level. COVID-19 has obviously damaged the economy, which is evidenced by the big drop in GDP, a negative growth of 6.8 for the first quarter of this year. And this is the first time we have ever seen since China started using GDP to measure its economy in the early 90s. With all precautions and prevention measures taken against the pandemic, the economy had to be in a stop mode for more than 2 months. During this period, we completely lost food demand from the HIR sector, although it was partially offset by stay-at-home consumption. And for other food-related industries, such as the public transportation, tourism, retailing, and entertainment industries, COVID-19 has the devastating effects. All this being said, we still feel confident of the growth in the next decade for soy with the ongoing urbanization, continuous economic growth, increasing middle class, huge feed animal and crushing industries. Although the projected imports in 2020 and beyond will be below the past 20 years trend line of an annual growth rate of about 12%. And I think if the trade situation with the US would continue to improve and the swine production will be recovered to pre-ASF level, China will import over 100 million metric tons of soybeans in a couple of years, which should have happened in 2019 if there would no trade war and no African swine fever. With that, I would conclude my presentation, and thank you.